What's going on, YouTube? We're back with another one. Today, we're going to be talking about two key players in the ETF world that I think every new investor should be paying attention to, that every new investor should know about, so that you can make an informed decision on which one you want to invest in. We're going to talk about how they're alike. We're going to talk about some of the differences and which one may make more sense for you as a new long-term investor. So, VOO is an ETF that tracks the S&P 500. That is going to be your top 500 companies in the United States stock market by market cap. So that's what VOO is going to give you exposure to. The top players, the top 500 companies in the stock market. Now, VTI, on the other hand, is going to give you exposure to the total stock market. So that's going to be large cap, mid cap, and small cap companies, whereas VOO focuses mainly on large cap. So both of these ETFs are brought to you by Vanguard, and we're just going to get into look at this. So we have the 15-year table pulled up. As you can see, the blue trend line is VOO, the yellow trend line is VTI, and as you can see, they pretty much trade the same. Very similar. Very, very, very similar. Of course, there's a difference in prices. You can see right here, VOO is trading at 465.52. VTI 248.47, at least for now. We'll see what's going on tomorrow. As you know, with all of these tariffs and all of that, we're having a lot of downturn in the market right now, a lot of uncertainty. But this is the perfect time to start building out those positions, because times of uncertainty, when there's fear in the market, when that VIX is going up high, that's a time to be buying, dollar cost averaging into these type of assets, because one thing we know, history repeats itself, the stock market always bounces back. So VOO, VTI, both Vanguard ETFs. VOO is tracking the S&P 500, top 500 companies in the United States stock market by market cap. VTI is going to be tracking the total stock market. So now that we've gotten that out of the way, let's get into the holdings. Let's get into some of the holdings. As you can see, VOO top holdings. Again, this is going to be your large cap: Apple, Nvidia, Microsoft, Amazon, Meta, Alphabet, Berkshire Hathaway, Broadcom, Tesla, Eli Lilly, Visa, Exxon, MasterCard, Costco, Walmart, Netflix, some very big names, some very heavy hitters. Whereas VTI, if we go down here, and VOO is going to have, I believe, 500 companies within the ETF in those holdings. And VTI has, I think, anywhere from 3,800 to 4,000 companies within its holdings. So this is one of the key things. If you want total stock market exposure, we're talking large cap, mid cap, small cap. If you want exposure to the entire market, VTI will be a good option. If you want exposure to the top players, the large cap names, the bigger companies, VOO may be the one you want to lean more towards. Now, again, they both have a lot of the same holdings, but as you can see, let's look at Apple, for example. We're looking at Apple on VTI. It's weighted 6.36%. That's how much Apple makes up of VTI's holdings. If we scroll up here to VOO, Apple makes up 7.24% of VOO's holdings. So it's weighted more heavily. You see what I'm saying? VOO has a lot less companies in it. So you can expect the weighting of some of these bigger companies to be higher as opposed to a VTI. Now, let's get into performance. Like I've told you, we go back here, overview. Okay, so we'll go to performance. And this is go to the 15-year time frame, because we always like to zoom out. We always like to zoom out so that we can see the bigger picture. Just look at it. As you can see, they're trading very similar to each other. Very similar to each other. I will tell you one thing: VTI is a little more volatile than VOO. Reason being is because VTI is giving you exposure to large cap, mid cap, and small cap, whereas VOO is giving you exposure to just those big dogs, the large cap. So VTI tends to be a little more volatile. VOO tends to be less volatile. Another thing is VOO tends to perform slightly better than VTI because it tracks mainly the bigger hitters, the large cap companies, the ones that tend to perform better, have more profits. Those companies are really the ones that are pushing the stock market anyway. So when you think about it, it makes sense that VOO would perform a little better than VTI. But for the most part, they tend to trend very similar, as you can see from this chart. Another good thing about VTI and VOO is the expense ratio. We talk about expense ratio all the time. As a new investor, you want to have a lower expense ratio. And luckily for us, VOO and VTI both come with a very low expense ratio of 0.03%. So they're pretty much on par there. And then when you come to the dividend yield, VTI and VOO produce the same dividend yield of 1.5%. So which one is going to be better for you? Me personally, I'm a VOO type of guy. I want to be exposed to the top players. I want to be exposed to those big dogs, and I want it to be heavily weighted within my ETF. So me personally, I lean towards VOO. Now, if you're someone who wants total stock market exposure, the VTI could be the route. But I say this, from my experience and from what I've looked at and what I've seen in regards to studying the charts and looking at the numbers, I prefer VOO because, like I said, you're getting the same performance of a VTI, but better, a little bit better. VOO is going to perform a little bit better, and it's going to give you exposure to the top players, the key players. See what I'm saying? So if we come down here, we look at let's look at some of the numbers like we like to do. So this is VOO right here. This is VTI. Of course, everything year to date is going to be down. We got a lot of macro news. When I'm talking about macro news, I'm talking about the tariffs. I'm talking about mass deportations. I'm talking about Doge efforts. All of those type of things play a role in uncertainty, play a role in why the stock market is not performing well right now. And of course, it's going to show up in these two ETFs because they're tracking the S&P 500 and the total stock market, and those are being affected. Those are being hit hard. But if we look at the TTM, which is trailing 12 months total return, VOO is giving you 4.91%. VTI is giving you 3.81%. Like I told you, they track similar, but VOO is giving you a little better return. If we go on to the 5-year total return, VOO is giving you 133.94%, whereas VTI is giving you 130.51%. Again, VOO performing a little better. We'll go all the way out to the 10-year total return. VOO is giving you 209%, and VTI is giving you 189.64%. So the proof is in the pudding. You're seeing the numbers, you're seeing the returns. VOO for me is the better option. And again, don't look at these prices and be, turned off or intimidated. This is something that you're going to dollar cost average into. We've talked about it before. Something that you're going to put money into, something that you're going to put money into every 2 weeks, every month, and you're going to continue to put money in that over the long term, and you will be able to take advantage of these gains. You see what I'm saying? If you look at it, VOO and VTI have gone up and performed great over the long term. We scroll out to the 20-year, as you can see, VTI has been around a little longer than VOO. VTI, if we look back, VTI was created in April 1st, 2005, and VOO was created on what is that? November about in 2010, around November time, November 1st or October 1st, 2010 is when VOO was created. But as you can see since then, they've pretty much tracked the same, and VOO has been better. So Which one should you buy? Which one should you buy? I do believe there's no reason to own both. I know some people that do. I don't think me personally, I don't think you need VOO and VTI if you are attracted to the lower price point of VTI, it being 248.47, a lower barrier to entry. You may think it's easier for you to accumulate. I don't see anything wrong with that because as you can see, they trade similar, and you're getting just slightly less returns than a VOO. Like I said again, me personally, I prefer the VOO. It's going to perform a little better. The expense ratio is the same, so you don't have to worry there. The returns are better, and you're getting exposure to all of the top companies in the stock market, being that it tracks the S&P 500. So, with that being said, you have the information. VOO, VTI, both amazing options. I wouldn't be mad if you chose one over the other. I do believe that you don't need both. So, choose what works better for you. If you want to go VTI because of the lower price, great. You're going to get similar returns. If you want to just go for a VOO, that's great as well. You're going to get slightly better returns and have exposure to just those large cap companies as opposed to VTI giving you greater exposure. Now, if you want greater exposure, especially that could be a good option for newer investors. You don't know where you want to put your money. You haven't done your research. You're still learning the game. You're still learning the ropes, and you want exposure to the total stock market. I can see VTI being a good option for you because it's going to give you all of that exposure, large cap, mid cap, and small cap. But there you have it. Another video, VOO, VTI. I prefer VOO. And like I said, this is something you're going to dollar cost average into, invest in for the long term. 5, 10, 15 years down the road, you're going to see amazing gains. You can't go wrong with either one. But let me know in the comments, man. Are you invested in VOO or VTI? Which one do you prefer? Do you prefer VOO over VTI? Do you prefer having that broader exposure from VTI and large mid cap and small cap? Or do you prefer just having exposure to those large cap companies that are really pushing the needle, pushing the GDP of the entire stock market anyway? I think if you're invested in VOO, you're getting all of the benefits of a VTI anyway. But that's what it is, man. The decision is up to you. I just want to bring you guys the information and spread awareness. And I'll see you guys in the next video. Thank you for tuning in.